Hello and welcome back. I am Wallace. This is Arborvitae Financial Services YouTube channel, and today I'm going to walk you step by step through an easy system to manage your first year of Washington state and federal taxes for a pass-through entity, small business in Washington state. The goal here is to simplify this and set you up for success. Disclaimer, this video is based on my personal experience as a small business owner with an LLC in Washington state. It's not a substitute for tax advice or legal advice. This video is for entertainment purposes only. Step 0. Save receipts. Save everything. If you have the records, you can always organize them later, but if they're lost, it can be very difficult to get them back. Complete documentation is the foundation of well-kept records. So even if you keep them in a shoebox, keep everything that has anything to do with starting your business. Step 1, save the money. The whole tax situation can feel overwhelming, and you can put off some of the tax-related tasks, at least for a while, but you cannot put off saving the money. Each month, take your gross revenue, which is the total income from all of your sales from all sources, multiply the number by 0.4, and transfer that amount of money into a separate savings account. Do this every single month. Save 40% of all your income. Step 2, know your deadlines. You pay state and federal taxes, and you'll have to know both your state and federal deadlines. So here are the state deadlines. They're based on your unique filing frequency, which will be assigned to you in your welcome letter from the Washington Department of Revenue. They send it to you after you register your business with the DOR and get your business license. Now note, if you've hired a registered agent firm to file your business with the Secretary of State, they don't do this step for you. You have to do this step, and you personally must do this step. Take the UBI number that you got from the Secretary of State and then use that to register with the Department of Revenue. Then they're going to send you a letter that tells you to file either annually, quarterly, or monthly. If you have quarterly filing, the deadline for tax payment is the last day of the month after the quarter. So that's April 30th, July 31st, October 31st, and January 31st. If you have monthly filing, it's the 25th day of the month after the previous month for which you're filing taxes. Your federal deadlines depend on your business type. For LLCs and corporations, it's April 15th. For partnerships, it's March 17th. Fiscal year reporting means you choose to pay federal taxes based on a yearly cycle that starts and ends on the last day of any month other than December. If you have personally chosen to do a fiscal year rather than the calendar year, this is probably, you're operating at a level more sophisticated than I'm intending this video to be. So I'm not going to talk any more about that. Quarterly estimated tax for federal taxes, those deadlines are a bit weird because the quarters are broken up differently. So Q2 has only 2 months and Q4 has 4 months. Federal quarterly estimated taxes are therefore due on the 15th of April, June, September, and January. Step 3, file your first Washington state excise tax return. Go to dor.wa.gov with your Secure Access Washington user ID and go to your business account. Navigate to Action Items. Your upcoming excise tax return will be listed there. Simply follow the instructions. If your business did not make money that period, you just report no business activity, but you have to file every single quarter after you register, whether you made money or not. You've already saved the money, so if you do have taxes to pay, it's no problem. Step 4, pay your federal estimated taxes. This is where those receipts you have in a shoebox come in. So state tax is based on the money that you have coming in, and that's easy to track, especially if you have something like QuickBooks. But federal taxes require you to deduct your legitimate business expenses, so you have to have those receipts, not only to remember what your expenses were, but to prove their legitimacy should you get asked. For your first year, You pay estimated federal taxes by annualizing the income and expenses of each quarter. The IRS provides instructions, a worksheet on how to do that. It's called IRS Publication 505. You can just Google that. And then the deadlines for those quarterly annualized payments are the 15th of April, June, September, and January. I'm mentioning that again just because it's so different than how we normally think of a quarter as being 3 months. Step 5, continue to file your Washington state excise tax returns. You're going to have multiple quarters go by, multiple filing deadlines go by. And the same too with your federal estimated taxes. Just keep hitting every deadline and paying those taxes. Step 6 is to prepare for your big end of year federal tax return. So you have your receipts in a shoebox. Divide them into 2 groups. All the money that you spent setting up the business before the day that you were ready to take your first customer or make your first sale, and then all the expenses from after the day that you were ready to take your first customer. The expenses from after the first sale, or like when you were ready and open for business, those are just business expenses. Set them aside. And then the receipts from before that day, we're going to divide them again. They're either organizational cost, which means expenses related to filing, licenses, operational agreements, legal documents and contracts that you had drawn up, legal or tax consultation prior to starting the business, and any other cost incurred to establish your business as a legitimate legal entity. Separate from those are your startup costs, which are normal and regular business expenses that you could expect to recur. They just happened before you were open for business. That's going to be supplies, merchandise you had to purchase for resale, rent, utilities, insurance, software, equipment, things like that. All of the costs that you incur to start a business that generates its first income in year X are deductible in the tax return for year X, even if they were incurred in a prior year. This is important to understand. So let's say you start your business in December. You've been kind of getting things ready since maybe late summer. You met with a CPA, didn't like them, met with another CPA. You have invoices from both of those conversations. You took some classes. You have some equipment that you purchased, tools you purchased. And then you start the business in December formally, and then by like next spring, you're ready to take customers. Don't file a business federal tax return until you're filing a full year later after your business has made its first money. Because even though you had business activity in terms of expenses, they were incurred to set up a business that generated its first income in a later tax year. So wait for that first filing for the year you make your first money. Now, the startup costs and organizational costs that you separated out are treated differently for federal filing. You can deduct up to $5,000 in startup costs and an additional up to $5,000 in organizational expenses in your very first year that you file a business tax return. If you spent more than those amounts, you have to amortize the deduction over multiple tax years. And if you spent more than $50,000 on either your startup costs or your organizational costs, the rules change again. So for those expenses, I don't believe it's the correct way to do it, to just lump it in with all your business expenses and then deduct it from your business income to get your business profit. They have to be handled separately, and it's best to have a CPA do that for you because of the amortization over multiple years. Any business expenses that were incurred after the day that you were ready to make your first sale, after the day that you were open for business, you just subtract those from your business income and you get your net profit. Now, it's important that those be legitimately deductible business expenses. They have to be regular for your industry, they have to be normal, and they have to have a defined business purpose. That way you won't get in trouble. Step 7 is to actually file your federal return. Most small business owners have a CPA do this for them. I personally recommend that. Once your CPA calculates your total federal tax due, it's easy to pay because you have that money saved, right? And if you've been making your quarterly estimated tax payments, you do not have a substantial tax burden to come up with at the end of the year. If you don't make those quarterly tax payments, there can be penalties associated with missing those deadlines. Now that you have 1 year of correct taxes under your belt, you take your total tax liability, divide that by 4, and that becomes your estimated tax payments for the following year. And that's your first year. I hope that seems easy. If you have questions or comments, please post them below, and thank you so much for watching.